Okay, guys. Okay, I'm sorry, there was a little disturbance here, so I had to end the live streaming. So let's continue from where I stopped. I was talking about the Central Board of RBI. Like I told you, they comprise of a body of officials from Central Bank and the Government of India, including certain officials which are nominated by the government. Now let's see who sits on the board. The board consists of official directors who include the governor and up to four deputy governors, non official directors who include up to 10 directors from various fields into government officials, and one director from each of the four local boards of RBI. Now, according to the RBI Act, the director of RBI board cannot be salaried government official, be adjudicated as insolvent, or has suspended payments to creditors, an officer or employee of the bank. Okay, so this was about the central board and why there was a contention between RBI and the government, and why there are questions being raised for the autonomy of the central bank. So for this, guys, I would request you to kindly read the functions of the RBI and the autonomy of the RBI. So why this is important? Because it will help you to answer better in the mains also. As far as the prelims are concerned, what can be asked? Moreover, they can ask about the central board. Okay, it's the central board of the central bank, or they can ask you about this PAT or whatever. They can ask you about the Section 7 of RBI Act. Okay, so anything, or maybe the functions of the RBI can be asked. So you should actually look into all this. You should also see the features of RBI and its function. Okay, now let's move on to the second one, the next topic, that is recently RBI had a panel on economic capital framework. Now let's first of all see why this was or what this news was. So RBI had constituted a panel on economic capital framework, which was headed by the ex-RBI governor Bimal Jalan. Now, the panel on RBI's economic framework has been formed to address the issue of RBI reserve, which is actually one of and again another sticky point between central bank and the government. Now, what is an economic capital framework? Now, economic capital framework refers to the risk capital required by central bank while taking into account different risks. Now, economic capital framework, it reflects the capital that an institution requires or needs to hold as a counter against unforeseen risks or events or losses in future. Now let's see why this panel was made by RBI. What are the terms of its reference? The panel will decide whether RBI is holding provisions and reserves and buffers in surplus of the required levels. First. Secondly, it would propose a suitable profit distribution policy which will take into account all likely situations of RBI, including the situations of holding more provisions than required on RBI holding less provisions than required. Now, Economic Capital Framework Committee will also suggest an adequate level of risk provisioning that the RBI needs to maintain. These were the points of reference. Important here is what is economic capital framework. So you should know that. Okay. Next topic is input tax credit. Now, what is input tax credit? It is a tax that a business pays on a purchase that it can use to reduce its tax liability when it makes a sale. Okay. In other words, businesses can reduce their tax liability by claiming credit to the extent of GST paid on purchases. Now, business under composition scheme cannot avail of input tax credit, and input tax credit also cannot be claimed for personal use or for goods that are exempted. One very positive feature of GST was to help avoid the undesirable cost of cascading effect that existed previously, but now in case of GST, there is a mechanism of input tax credit which helps to eliminate the cascading effect of the cost. Okay, so this was one of the important features of this input tax credit and GST. Okay, now the next topic is Exim Bank. Now recently the cabinet had approved about 6,000 crores of capital infusion in Exim Bank, and it increased in the Exim Bank authorization of capital from 10,000 crores to 20,000 crores. Now let's see what the Exim Banks is. Now Exim Bank of India, that's Export Import Bank of India, was constituted under the Export Import Bank of India Act 1981. It is a specialized financial institution which is wholly owned by Government of India and was set up in 1982 for financing, facilitating and promoting foreign trades of India. Exim Bank also extends lines of credit to overseas financial institutions, regional development banks, sovereign governments, and other entities overseas to enable buyers in those countries to import developmental and infrastructure projects, equipments, goods, and services from India on deferred credit terms. Okay. Now, Exim Bank has laid strong emphasis on enhancing project exports, the funding options for which have been enhanced by introduction of the Buyer Credit National Export Insurance Account, that's BCNEIA program. Now let's see what are the functions of this bank. It provides direct financial assistance to the exporters of plant, machinery and related services. It also helps in underwriting the issue of shares, stocks, bonds, debentures of any company engaged in exports. It provides rediscount of export bills for a period not exceeding 90 days against the short-term usage export bill discounted by commercial banks. The bank gives overseas buyers credit to foreign importers for import of Indian capital goods related services. And the last thing, the fifth one is developing and financing export oriented industries. So these are the important points, the important functions of Exim Bank in India. Next topic, guys, is public credit registry. But before I start that, I want you all to, take a little break because it was a lot of topics that I just told. I'll just take a 10-15 second break and then start again. I hope I'm making sense what I'm doing right now. Okay. Okay, I have a question here from one of our group member. He's asking or she's asking as what is the extent of reading the current affairs for 2020 attempt. Well, guys, like you all know that current affairs is one of the major component of our preparation, so we need to ensure that we're reading it on daily basis. As far as 2020 is concerned, guys, the safest time that I would say should be now. You should start reading from May. Okay, if you can go back, you should go back till January. Okay, that's, I think that should be a safe limit for you to study. You can go back till January 2019 till May 2020. That's just before the exam. Okay. So let me just quickly now get back to the lecture. Okay. The next topic is public credit registry. So the RBI has recently shortlisted 6 major IT companies to set up a wide-based digital public credit registry to capture the details of all borrowers and willful defaulters. The public credit registry, it will be an extensive database of the credit information for India that is accessible to all the stakeholders. The idea behind is to capture all relevant information in one large database on borrowers, and in particular the borrower's entire set of borrowing contracts and outcomes. It will also include data from entities like market regulator, SEBI, the Corporate Affairs Ministry, Goods and Services Tax Network, and the Insolvency and Bankruptcy Board of India. It will actually enable banks and financial institutions to get a 360-degree profile of existing as well as prospective borrowers on real-time basis. It will be managed by a public authority like Central Bank of Banking Supervisor, and the reporting of the loan details to the PCR or the Public Credit Registry by lenders and borrowers is mandated by law. There are benefits of holding it because PCR has a potential to help banks in credit assessment and pricing of credit, as well as in making risk-based dynamic and counter-cyclic provisioning. PCR can also help the RBI in understanding if transmission of monetary policy is working, and if not, where are the bottlenecks. It can also help supervisors, regulators, and banks in early interventions and effective restructuring of the stressed bank assets. It will also help banks and negotiate and regulators, as credit information is a public good and its utility is to credit market at a large and to society in general. Okay, now next topic, guys, is the FDI policy on e-commerce. So this was quite important. We should look into it. Now, Department of Industrial Policy and Promotion, that's DIPP, has changed as the Department for Promotion of Industry and Internal Trade, DPIIT, recently, and it issued clarification for existing rules pertaining to the foreign direct information in the e-commerce. What were the main features of the clarification? Let's look into that. Vendors that have any stake owned in an e-commerce company cannot sell their products on e-commerce company's portal. Any vendor who purchases 25% or more of its inventory from e-commerce group company will be considered to be controlled by e-commerce company and thereby barred from selling on its portal. The provision aims to ensure that the vendors in which marketplace such as Amazon have a stake and do not sell the bulk of their items to a third party vendor who then goes on to sell those products on e-commerce marketplace. In other words, the provision seeks to deny control by marketplace entity over vendors, and e-commerce firm will also not be allowed to influence the price of a product sold on its portal by giving incentives to particular vendors. Now let's look into a little bit of the background. As e-commerce company, they can operate in two different models in India. One is the marketplace model where e-commerce firm simply acts as a platform that connects buyers and sellers. And FDI in e-commerce company in this model is allowed. The second model is the inventory base, where inventory of goods sold on the portal is owned or controlled by e-commerce company, and FDI under this model is not allowed. Okay, now let's look into the next one. Commodity derivatives contract in gold and silver. Recently, Bombay Stock Exchange became the first stock exchange in the country to launch commodity derivative contract in gold and silver. Till date, commodity derivative contracts were available only on MCX and NCDEX, the two specialized commodity derivative exchanges of India. The launch of commodity derivatives from the platform of BSE will actually help in efficient price discovery, reduce timeline, and make it cost effective. A derivative is a contract between two parties which derives its value or price from underlying asset. The most common types of derivatives are futures, options, forwards, and swaps. The value of underlying asset is bound to change as the value of underlying assets keep changing continuously. Generally, stocks, bonds, currency, commodities, and interest rates from underlying assets. Okay. So the next topic, guys, is the monetary policy and the monetary policy the committee. RBI uses the monetary policy to control the inflation, interest rates, supply of money, and credit availability. The government has constituted the Monetary Policy Committee, which is tasked with framing of the monetary policy using the tools like repo rate, reverse repo rate, bank rate, and cash reserve ratio. So, guys, these terms that I said, repo rate, reverse repo rate, bank rate, cash reserve ratio, you should be thorough with these terms, the definitions of it, because they are important. They have been asked in previous year UPSC exams as well. So, you should know that. See, these are the some of the basic terms that we should know of the banking and the financial sector. Now let's see the composition of MPC. It has 6 members. Of these 6 members, government is going to nominate 3, and no government official will be nominated to the MPC, the Monetary Policy Committee. The other 3 members would be from RBI, within the with the governor being the ex officio chairperson. Deputy Governor of the RBI in charge of the monetary policy will be the member and also an executive director of the central bank. Decisions are taken in by majority vote, with each member having a vote. RBI Governor will chair the committee, and he will not enjoy a veto power to overrule other panel members, but will have a casting vote in case of a tie. The members of monetary policy will be appointed for a period of 4 years and shall not be eligible for reappointment. Okay, so the next topic, guys, is Unified Payments Interface, that is UPI. It's very famous these days. Everybody is asking for making a UPI wallet and everything. And there's a Amir Khan ad also, Gublu, the UPI, the phone pay app. So that is also UPI payment based. So let's see what this UPI is. It is actually a payment system which was launched by NPCI to aid instant transfer of money using cashless system. Using UPI services, one just requires a smartphone and a banking app to send and receive money instantly or pay a merchant for retail purchases. Now, government has recently issued some guidelines for, sorry, not government, but RBI has released the guidelines for interoperability between prepaid payment instruments, that's PPI, such as wallets and cards, to transfer money from one wallet to another. In long run, UPI is likely to replace the current NEFT, RTGS, and IMPS system as they exist today. Now, let's see what are the 3 key players or of the UPI ecosystem. The first is the payment service provider, that's PSPs, which provide the interface to the payer and the payee. Unlike wallet, the payer and the payee can use these 2 different PSPs. Second, the bank to provide the underlying account. In some cases, the bank and the PSP may be the same. NPCI to act as the central switch between by ensuring VPA resolutions and effective credit and debit transactions through IMPS. Now, now the next topic is Payment Regulatory Board. Now, there was a news recently that RBI has opposed the centre's proposal to set up an independent payment regulatory board, which will oversee all payment systems in the country, stating that the proposed body must remain with RBI and headed by the RBI governor. Now let's look at the background of it. There was a 7-member government panel which was headed by Subhash Chandra Garg. The panel proposed in August that a payment regulator should be established independent of RBI, which with a chairman appointed by the government in consultation with the RBI. The proposal overruled the bank's recommendation that its governor should be the head of the payment regulator. Now, why RBI is opposing this move? Because RBI cited the report by Vattal Committee on Digital Payment as recommending the establishment of the Payment Regulatory Board within the overall structure of RBI, and therefore there was no need for any deviation. Okay, the next topic is commercial papers. Now, commercial papers have become one very popular route for corporates to raise funds when compared with loans from banks recently. Now, what are these commercial papers? Let's look at that. So, they are an unsecured loan raised by firms in money market through instruments issued in the form of promissory notes. They are famous because surplus liquidity, short-term borrowing rates in money markets have significantly declined post demonetization and are much lower than the lowest banking lending rate of the bank. The advantage is that apart from being a cheaper source of fund, it helps meet funding requirements relatively quicker for better rated corporates. Procedural requirement for securing the bank facility and charge creation on assets is also not required. But there are certain challenges. As commercial papers are unsecured loans, the investor in commercial papers largely prefer highly rated corporates or public sector entities in terms of credit rating. Lender appetite is limited to better rated companies. Also, commercial paper market can also be seasonal and vulnerable to liquidity conditions. So, commercial papers can be a very important topic for this year's prelims. So, you need to read that, and it can actually be a very important topic for mains perspective as well. So, what are the various uh, measures by which the companies can raise loans and everything. So this is an important one and can be very much asked in the prelim, so you should just read through it properly. Next topic it is the participatory notes. What are participatory notes? They are used by overseas market participants that do not want to get registered as foreign institutions investors, that FIIs. P notes are not issued in India. Further, these are issued by an India registered FII to other overseas investors. The FIIs will be the entities to initiate a transaction in our stock market, which could be on behalf of foreign clients. Okay, they are actually issued. P notes are actually issued by the FIIs to the clients, underlining that the securities are held on behalf of the client in the name of FIIs. Now, what are the concerns of government and the regulators? The primary concern is why P notes are worrying is because of the anonymous nature of the instrument, as these investors could go beyond the reach of Indian regulators. Secondly, there is a view that it is being used in money laundering with wealthy Indians like promoters of company using it to bring back unaccounted funds to to manipulate their stock prices. So these are the two concerns that P notes have. Okay, so guys, I will be ending today's session here. Okay, and I will pick up tomorrow again from the economy session. The financial and banking sector has not ended yet, so there are more 10 to 15 topics that have been left. Very important for this year's prelims. So I would request you all to join me back tomorrow from 6 or 6:30. I would be announcing the time tomorrow itself. So kindly join me. I will also be providing you the notes for this lecture on the groups, and you can read through that for better understanding. And if you have any queries and questions regarding the topics that we did today, you can definitely put that on the group. And if you want any of the improvisations on this lecture, you can definitely put through your reviews on the group itself, or you can send me a personal message on WhatsApp. My WhatsApp number is 844-730-8407. Thank you so much for joining me today. Have a very good evening and all the best to you guys. Do really well in your paper and prepare hard. All the best.